the problem with Glencore is that this is a company that was 80% trading, 20% hard assets until 2012. Right at the top of the cycle, they bought Xstrata. Changed the face of the company completely so that they're now 80% hard assets, 20% trading. And the whole idea was if there was a downturn in the commodities markets, the trading acumen would help offset the hard assets. It didn't work that way. The traders were long the same commodities the mining assets were. And so, you know, if that was the reason to put this thing together, one has to question that strategy. And if you look before that 2012 deal, Glencore was earning double digits on its capital. It was a trading house that was basically a good trader. Now they're earning low single digits on their capital. It's changed business.
You seem to know a lot. Does that mean you went short last
Exactly.
week?
Let's just say I'm a potential purchaser.
You're a potential purchaser.
I'll let you think about that for a second.
A potential purchaser of what?
Well, you have to close out a short position. You have to buy stock, right?
But what are the moves they're making now? They're selling copper mines. They've cut back on their zinc production.
So they were buying assets at the top of the market.
Right.
And now the commodities have crashed. They're selling assets. Does that sound smart to you?
But do you think that, I mean, zinc they cut way back on, right, on Friday.
Yeah.
And there was indication in the markets, as I recall, the terminal indicated that really the price was going up on zinc.
Right.
Do you think that they are in a position to be able to support the commodities prices?
But if they're getting rid of the asset and that makes the price go up, they don't benefit from that, right?
Right.
That's the problem. And so, again, I'm concerned about a company that's supposed to have this great trading acumen that seems to be buying things at the top of the market and selling them at the bottom. I mean, that just doesn't sound smart to me. And so I think that...
Well, until 2012, you'd be hard-pressed to find them doing anything that wasn't smart. I mean, it was an extraordinary company. Like, yes, what you've laid out makes the argument. They've left their core competency. They've jumped the shark. Trading is what they do, and they've left that. But this is really a big mistake, but the first mistake we've seen out of them.
So they did very, very well in a bull market is what you're saying.
Okay.
And when the markets turned bad, they did not so well. And I think that at the end of the day, that's the issue, was this just simply a play on rising commodity prices as opposed to a company that made lots of money in both good and bad markets? And I think that certainly we can question that.